All right.
And we are live. Good morning to you, Vernon, and good morning to
Good
everybody
morning.
who is joining us today. How is your beloved? We're going to call this
Good
Youth
morning.
Week. We're going to refer to this as Youth Week because it's our Youthy Week. You know,
Mm.
that's what we're going to do. Because it's I think the youth are the heroes of the of the nation.
Absolutely. Absolutely.
We're always referred to in almost every presidential speech or anything. We're always reminded that we pulled
Mm.
off that the youth pulled off an election. Yes, I'm still holding on to the status as principal youth for the meantime. But good morning to everybody. Thank you so much for joining us on here on Behind the Markets, and hoping it's a wonderful Tuesday for you. And we got plenty to break down to you, Vernon. First things first thing, obviously the usual market roundup. Then we're gonna go into there's a bit of news, obviously, with Vice President Harris set to visit various countries, including Zambia. I mean, I'm not sure how long it's been since she's actually been back here, because you do remember that she was a child here at one point. She did stay here when she was much younger. And then we're gonna go into this conversation about SVB Bank, Silicon Valley Bank, and what implications it has on the global sector of financial markets. That is a big question I keep getting asked, and I want to try and break it down for as many people as possible. And finally, today we're going to talk about the final conversation we're going to have today has got to do with transfer of wealth, financial wealth, your financial assets. Those are some of the things that we're going to actually try and talk about and deal with: intergenerational wealth transfers, how to deal with that. And I know that's always been a big conversation for us as a group, as a people, because I'll tell you, whenever you sit with black people, whether it's black UK, black US, black Africans, the biggest conversation they keep having is how on earth do we attain intergenerational wealth? Because they see everyone else do it. So we're going to try and talk about intergenerational transfer of wealth. Specifically, we talked about intergenerational succession yesterday. And we're going to use those same five components of intergenerational succession and apply them to actually creating an intergenerational wealth transfer plan, so that you can sleep comfortably, or you can sleep well at the end of your life. When we say sleep well, we mean no, in peace. That's what we mean when we say rest in peace. I know people that's like throwing the words RIP out. But let's get started for today's session. We do see that the Kwacha has continued down its slide. It's not turning around anytime soon until we get this debt negotiation dealt with. Now, obviously, that might be one of the reasons why we're having the American VP even coming to visit, because she is visiting countries like Ghana, but we will get down to that very soon. But we are seeing the Kwacha continuously coming down the slide, while the Rand is basically twisting up and down around the Kwacha. So I think the only decent news that we are having is that the rand has not gone flying off. So it is a dollar strength story, or at least a regional weakness story. So I think that might help calm a little bit down. But remember that we do import quite a lot. We do import quite a lot in from China and India, which is actually in dollars. Which has to come, yeah, which is actually what we import in dollars, and even some of what comes in from South Africa has to come in dollars. It's a very tough swing, people, unfortunately. Now, coming into the rest of the markets, we did see that bonds did close a little bit upwards on the secondary market. We are prepping for the next auction, but the bond index on the secondary market is up 0.13% year to date, up 5.69%, showing upwards movement. While in the USD sector, it's down 5.7% year to date and down 0.38%. So you can see that there's an upwards movement on Kwacha, but it's like half. It's doing half downwards on the US dollar index for bonds itself. So you can see, unfortunately, it is pulling down. If you are an offshore investor and you're looking at your secondary value, now here's what you have to look at. If you're a Zambian abroad investing in Zambian government bonds, this shouldn't bother you. You should be tracking the value of your bonds in kwacha, not in dollars, because the liability you want to spend that money in is in kwacha. This dollar index is mainly for offshore investors who are trying to look for ways to diversify their portfolios into Zambia. So this is your institutional investors. This is what they are facing, and unfortunately, due to the weakness of this country, it's like an echo. Okay, the weakness of the currency makes the U.S. bond investors sell their bonds, which makes the currency weaken even further, which makes the U.S. investors sell their bonds even further. It's a
Unfortunately.
feedback loop, unfortunately. That works negatively against the bond market for offshore investors. But if you're a Zambian, and I know Zambians like playing the offshore, or we like playing the forex market. It's not a smart move. I always say that. Always look at what you are saving for, not just to get rich for rich sake. What is it for? Are you looking to have a retirement in Zambia, which is going to be spent in kwacha? You want to have it in dollars? What I know with most Zambians is that obviously there's always the fear that our currency can lose drastic value, and then import values are horrible. But if you're looking at the fastest growing side of it, even during periods like that, your treasury bill market and your bond market do well. So all you have to do when things get uncertain in Zambia is just shorten the duration of your bonds. That's all you ever do. Whenever you're investing in the bond market, it's always about shortening the duration whenever things get uncertain, so that you don't lock yourself into a lot. And we'll teach you the lesson there with what we've seen from Silicon Valley Bank. Now, what we also seen also is the commodity space. We saw the commodity market push downwards. Copper did close last week at 8,835, and it's opened a little bit higher. Oil is the one that's knocking it down. It's below 80 for the first time. It opened this morning below $80 for the first time, mainly driven by scares from Silicon Valley Bank, and also from the CPI data that everyone is waiting for. Remember, waiting for U.S. inflation data. Simultaneously, we also did see gold also push up to 1,900, waiting for CPI data. Not really perturbed by this, but if you take a look now at the wealth insurance assets, your gold in kwacha is up 14.7% year to date, up 1.69%. Remember that dollars are up. Let me just go back to our FX rate, but the US dollar side is up 11.66% year to date. So you are seeing that gold in kwacha is up 14.17. So there's a little bit of a premium on top of that. While we did see cryptocurrency close negatively, but we have seen it open positively this morning. Bitcoin is back up to $24,000 from $20,000. Why has that happened? Because there is the assumption that now that we've seen bank failures starting to happen, specifically because of interest rate hiking from Silicon Valley Bank, the assumption is that the central bank of the USA is going to hold off on hikes. However, I don't see that happening because inflation is still sticky. Though inflation expectations are starting to come down, and parts of the inflation curve are starting to come down, and Federal Reserve, Federal Reserve Bank did actually say that they're seeing that supply chain inflation pressure has actually dropped to the lowest in a long time. They still is some sticky parts of the inflation curve. So we are seeing that Bitcoin is down 0.77%, but it's expected going to jump up another 20%. So it should be up this morning. It's up 50% year to date, while Ethereum is also up 50% year to date. So we have seen that movement back. So for those of you who are crypto investors in the wealth insurance market, I must say this again because I'm going to say this multiple times until it sinks into people's heads. These are high risk assets, people. You don't want to hold too much of your portfolio in them, because what ends up happening is that when these things go rotten the other way, you start saying, no, I told you diversify your portfolio slightly, 5%. You heard 50% return on investment and wanted to get rich next week. And this is what happened to you. So this is what I'm trying to explain. Take it slow. This is a hedge. It's a hedge against the broad-based markets. What are we seeing on the general markets? Bond index, bonds up 5.69% versus year to date. Stocks are down 1.51% as we're in the middle of results season. And results season is struggling to turn the tide. That, I think, is a bit of a concern for me, even though businesses are coming up with semi-okay results. One thing we are seeing, Vernon, is that the strength of the kwacha last year actually resulted in poor results for the export-driven companies, be it Chilanga Cement due to their cement exports collapsing. What else happened is African Explosive also saw its explosives and materials exports also collapsing because they said the material prices of what they were selling went up. And also Zambia sugar saw export prices also go down. So we've seen that a strong kwacha, unfortunately, has a negative impact on some of the export-driven companies, which then affects job creation. So I know people will say, no, but the cost of living. Sure, but then what is the cost of living, Vernon? And I ask you this question. What would you rather have, Vernon? Rising costs or no job? Or no income, let me say.
Of course, you want to have a job. As much as there's, an increase in commodities, at least you're able to afford whatever you can. Maybe cry for a wage, increase, maybe.
Yeah, that's the best you can do. But what I'm saying is that what hurts worse is no income coming in. So you have to be very careful about trying to push
The
the
money.
exchange rate up too high. Sorry, I don't know if we have a call. So yeah, I'm saying
Remember
that we
mentioning
have to be
about the
careful
no
of.
money part.
Yes. I'm saying we have to be careful about trying to push the exchange rate of the kwacha too strong, because it then results in businesses slowing down on job creation. Then we have an unemployment problem. So unfortunately, we are juggling between unemployment when it comes to exchange rate. We are juggling between unemployment risk, and we're juggling between unemployment risk and inflation risk. But I think the best we can try and do is balance the equation out by trying to get some stability. I think getting to a stable point might be the best thing for us as a world. Now, also looking at this, Vernon, we are seeing that the USD is up 11.66%, gold up 14.7, Bitcoin up 35, but it's going to be registering 55 at the beginning of today, and Ethereum 52. So your wealth insurance products, and therefore the market is still in a defensive position. Taking a look at the four horsemen, inflation reads right now are showing that oil prices have dropped below 80 for the first time due to SVB fears and CPI data. Inflation in India, remember that India is our third biggest import destination, holds at 6.44%. So therefore, imported goods from India are likely to hold at a specific rate, while U.S. consumer inflation expectations drops below 5% for the first time in a long time. So we are seeing that inflation pressure is holding still or coming downwards globally. U.S. short-term interest rates, however, have also held still because of the worries in the banking sector, while Japanese banking sector also slides on SVB fears. So there is a bit of a reaction happening. Now, in the industrial sector, something interesting did happen, Vernon. Panama's Maritime Authority has lifted the suspension on First Quantum Minerals operations at Port Punta Rincon. Trying to get that correct. I'm hoping that's not an insult. Which the Canadian company uses to export concentrate from its key Cobra Panama mine. Okay, so that's actually quite an important factor, because there has been a problem with the First Quantum and Panama's government. Now, they did come up with an agreement last week, Wednesday. The Panamanian government and First Quantum Minerals last week, Wednesday, said they did reach an agreement of the final text of their new contract for the mine, which accounts for 3.5% of Panama's GDP. So remember, everybody's been debating, because now what happens when Cobra Panama comes back on the mines, comes back on the market, increase in copper supply comes back, and therefore it can suppress copper prices a little bit. We have had strong copper prices because of strong EV-based demands and strong renewables demand, but we have had also got a shortage of supply. Because South America's had problems, from Peru, who's having shutdowns of mines because of the strikes and whether they'll be coming back on. Chile is having issues as well, while Cobra Panama was also having problems. So there was a lot of political issues in the economy of South America, leading to lower supply. And these were strong suppliers of copper on the market. Also, we saw in the industrial sector is Q1 Japanese large manufacturing conditions dropped to the lowest since mid-2020, peak pandemic time. So we have a weak manufacturing sector in Japan, which can also affect some of the industrials prices. While we did see Mexican manufacturing industry, remember, which does do a lot of the US manufacturing, holding strong, that can affect the outlook for copper. So there's a little bit of a negative outlook for copper. We're seeing flat to weak manufacturing demand, while we're also seeing more copper coming back onto the market. This might start to affect the demand for copper altogether. But remember that we have a strong EV market altogether, Vernon. Altogether, we have a strong EV market. Turkish. Now, we also saw in the growth sector of the global economy, Turkish consumer growth continues to the highest in 2021 months, while the U.S. labor force participation rises to the highest since mid 2020. Now, that's a very important piece of data. I say this, Vernon, because when you are looking at what the Federal Reserve is likely to continue doing, people are making guesses that the Federal Reserve is going to slow down on its rate hikes. But the Federal Reserve is keeping an eye on labor markets. So it keeps seeing growth in the jobs market while it's also seeing rising labor force participation. That is a signal to it that America has the strongest. Now, this is the highest labor force participation since the pandemic was in full swing in June 2020. So they've got a very strong 62.5% labor force participation. The highest, obviously, is 63.5%. That was at the end of 2019 when America had the strongest labor market that it really had, which that was what President Trump was going to do a victory dance over until the pandemic came and wiped all of his gains out. But the strong labor force participation in America is a signal to the Federal Reserve that they are not finished with the inflation fight. Now, it is going to be a balancing act to make sure that there isn't widespread banking failure, because we're going to have to talk about this SBV situation. But I don't see the Federal Reserve, as long as labor markets are this strong in America, I don't see the United States Federal Reserve slowing down on hiking interest rates until it neutralizes inflation down to about 4% or less. That is what they're trying to push it to. Now, the EU also, the EU finance ministers are also converging on broad principles to reform fiscal rules to make them fit better with post-pandemic economic realities. But critical details do remain negotiated, so the document showed. And we are seeing that under the current proposal, the European unions are limiting deficits to 3% of GDP, and they're limiting debt to 60% of GDP. So a country can only have a deficit of its budget equal to 3% of GDP and debt only 60% of GDP, and that would stay unchanged. Now, some of them are saying this one-size-fits-all situation may not work for them, but the European Union is also always worried about certain countries, because remember, they had the European debt crisis that time with Greece. So they have to control what their members are doing, also to keep the strength of the euro alive, which keeps them away from having to lose too much strength, to having to battle inflation from a weaker currency. So that's the four horsemen. We are seeing that inflation is starting to cool off. Interest rates are holding still due to worries of what's going on, while simultaneously we're seeing an industrial sector that's also riddled with quite a number of weaknesses, and also copper outlook that might push the prices down a little bit lower, therefore affecting tax income, therefore affecting the stress of the government. While simultaneously we are seeing some growth expectations, but we're not going to be seeing much spending happening, especially from out here. But we are seeing some growth expectations and a really strong U.S. labor market. Now, coming into some of the news for today from our 5 things to know, we did see that one of the main headline stories was that Vice President Kamala Harris is actually set to visit Zambia along with 3 other countries. And getting this from The Hill recently, it is saying that Kamala Harris to travel to Ghana, Tanzania, and Zambia. Now, remember, Ghana is also in a horrible debt situation. Tanzania is getting strong. And it is saying that Vice President Harris will travel to Africa in late March to visit Ghana, Tanzania, and Zambia on the latest outreach. On the latest outreach of the administration to nations on the continent. The trip will strengthen the U.S. partnership throughout Africa and advance our shared efforts on security and economic prosperity. Kirstie Allen, the president's secretary, did say Harris and the second gentleman, Doug Emhoff, will travel from the 25th of March to April the 2nd, making stops in Accra, Ghana, Dar es Salaam, and Lusaka, Zambia, where she will meet the president of each of the countries to discuss regional and global priorities, including shared commitments to democracy, inclusive and sustainable economic growth, food security, and effects of Russia's unprovoked war on Ukraine, among other issues. I love the way we use the word unprovoked, as if NATO wasn't trying to turn Ukraine into a nation. It's not like Russia is supposed to retaliate like that, but let's not use the word unprovoked loosely. Now, remember, last week we did have a conversation, Vernon, about what is happening in Zimbabwe. Okay, that may be driving some of this. And I want to just quickly recap this with people why it's important for somebody like Vice President Harris to actually be visiting countries in Zambia. And the reason is China has been moving in on some very important minerals. So I'm going to just play this again because we did talk about it. And I want to just make it important. Yeah.
Different minerals, including all 5 of the critical minerals needed to build electric vehicle batteries: lithium, cobalt, manganese, nickel, and graphite. Minerals play an important role in the economic growth of Zimbabwe, accounting for 60% of the country's total exports, with the mining sector contributing to 11% of the national GDP. In 2023, it's expected to grow by 6% and is valued at 12 billion US dollars. Zimbabwe primarily mines gold, platinum, and diamonds, but lithium prices have skyrocketed. The price in May of 2022 was 7 times higher than the price at the start of 2021. Zimbabwe is looking to capitalize off this increase, and the country could potentially meet 20% of the world's demand for lithium once it fully exploits its known resources. Chinese companies Yu Cobalt and Sinomine Resource Group own both the country's most important and resource-rich lithium mines. Zimbabwe is looking to capitalize off this price surge, signaling to the world that it's open for business, but only if it benefits the country. In 2009, China overtook the U.S. as Africa's largest trading partner, growing from $121 million of traded goods in 1950 to $10.5 billion in 2000, and now $254 billion in 2021, compared to the U.S., which sat at $64 billion in 2021. China now accounts for over 70% of global EV battery production capacity, and with over 20 years of consistent commitment to African nations, it has placed itself in the right position to access the resources needed to continue this trend, leaving the U.S. to play catch-up. In December of 2022, U.S. President Joe Biden welcomed 49 African leaders to Washington, D.C. for the country's second U.S. African Leaders Summit and its first since the Obama administration.
The United States is all in on Africa's future.
This summit was a critical step needed to reestablish U.S.-African relations, which were rocky in the previous administration.
It took 8 years to hold this summit. This came as a reset in the United States and African countries. It also was an important moment for the U.S. to signal to Africans that they take Africa.
Okay, so getting back to all of this, Vernon, I think the biggest point that we can get from that conversation is that the Chinese economic policy with Africa has actually put them in a very strong position, and therefore you can obviously see why we're starting to see visits from people like Vice President Harris to actually make sure that they cement as much good relations, because if they want to start having access to nickel, to cobalt, to lithium, especially for EV batteries, whoever is controlling the EV battery supply chain has a very strong chance of controlling the future of the world. And China is trying to make sure that they have that pole position. Now you're seeing that obviously we're starting to get a lot of visits coming from Western countries trying to negotiate debt in Africa, especially between countries like Ghana and Zambia, to try and see if they can try and be the heroes in this situation. But remember that there is a lot, they're also trying to counter. This is obviously an administrative effort to try and counter the strong influence that the Chinese government does have across Africa. And obviously, recently we did see that President Xi Jinping was reinstalled and has been congratulated even by our president for his position, just to show that we are playing neutrality. This is why I keep saying, no matter how many visits we get from our ex, let's make sure that we don't give them the position of number one again. We need to make sure that whatever is happening currently, we play each side against each other and maintain our neutrality, maintain our independence. That is the most important policy that we must uphold, because shifting from one of these sides to the other, unfortunately, will be our undoing as a country. One side demands too much social, the other one can sometimes finance corruption if you're not careful. So you want to try and make sure that the two of them are keeping each other at odds and at bay. There's a scene. Sorry, I don't know if Vernon's here with me. Anyway, there's a scene in the movie Selma where, which is the chronicle of Martin Luther King trying to do the march on Selma, and Malcolm X. Malcolm X comes to visit Martin Luther King in that movie. We never know how true this is, but Malcolm X comes to Martin Luther King and says, "Let me be the counter. Let me be the scary alternative that if they don't negotiate with you, they fear that they will have to face me." Okay, so keeping Malcolm X barking about the ballot or the bullet, and we're going to take it by any means necessary, scared them white folks into Martin Luther King's hands. And I think that's the best way to kind of play this situation. That if one side tries to overplay with you, you can tilt them and say, well, I mean, we have an option here. So having options is going to be important. So yes, they are coming to strengthen ties. They're coming to try and see what they can do to help, and obviously trying to reestablish Africa policy. But do not undo the relationship you have with China, just to the degree that you want to try and hold on to your sovereignty. What will protect Zambia's sovereignty is having good relations with America, China, and the Middle East. The three sections which are trying to lead to the growth, the three sections which are trying to lead to pure growth of the global economy. They're the ones that are going to be the leading sections. They're the ones who are tossing capital around and trying to make differences. So you want to try and make sure you're in the good with as many of them as possible to build your economy. Do not, I repeat, do not pick sides. Do not pick the side of the Chinese. Do not pick the sides of Americans. Do not pick the sides of the Middle East. Just stay in the middle and say, as we have seen, or at least as was told to us, our foreign policy will be on economic cooperation. Okay, Zambia's needs must come first before trying to make sure we get involved in the muddles and scuttles of the world. Okay, so that's obviously what we're trying to see here. But obviously, it's good to see that they're sending someone back to her childhood home, where she actually did come and visit. Sorry, I don't know if you had a comment on that.
I'm actually sorry to cut you. Yeah, I'm thinking we have been the IMF has been, I think, as gentle and understanding as they can default at some point, and then they still make time to actually visit us in person. They actually sent, an IMF official recently. But then also that Kamala Harris is showing up again soon. Do you think we as Zambians understand the potential we have if we can have Kamala Harris coming all the way, and we have China also trying to strengthen or grow their presence, when it comes to lending and helping Zambia restructure debt with regards to just debting and financing. China, of course, is taking a stronger position, and this is why now we see the IMF, of course, trying to also position themselves in a stronger position with regards to just how Zambia is performing with regards to finance. Understand the kind of potential we hold. I mean, for me, if we can see these kind of entities coming to the country and strongly wanting to be part of us and whatever a success country welcomes, and I feel it should be an indicator and translator that we have something incredible. And like you put it, it's playing smart, losing relationships or cutting relationships, but we can leverage on both, make a win-win situation, especially for ourselves.
I think what because, unfortunately, I say this, Vernon, with as much honesty as I can, poverty makes people think about the now and never really about the future. So we never really have our eye on where things are going. We're obsessed with where things are right now. Because if we were smart about this, Vernon, and unfortunately, that is the nature of it. That is actually, if you want people to think long term, you have to move them out of poverty. Because once a person is out of poverty, they think intergenerationally. They think that's when you start. That's why you see climate change is the concern of the developing world and of the developed world, and not of the developing world. Okay, you can't tell somebody who's trying to feed themselves and only has Malaysia as an option that cutting trees is wrong. You're making them pick between the future of the environment and starvation today. They're gonna pick starvation today. So that's what I mean when I say poverty makes you short-sighted. Unfortunately, it also blinds you to the trajectory of the world. And what I've told you is that Zimbabwe is now playing its hand with lithium. DRC is playing its hand with cobalt and making sure that both sides, okay, can feel like they have an open playing field, not where we lean so hard to one side. Because in the 90s we leaned very hard to America. In the 2010s we leaned very hard to China. We need to balance in the middle. Okay, and therefore now we have trade leverage. We can now start requesting, well, start opening up some of your capital markets towards supporting some of our banking sector, or at least supporting some of our small business sector, so that we can get cheap capital down the line. Give us cheap loans so that we can now start bringing solar infrastructure into Zambia. The Zambian business community can actually start to come and start negotiating. So as these doors are open, that doesn't mean it's just sitting there and folding hands and watching the president do everything. You now can use these kinds of relations. So let me give you an example. Say you want to raise money for renewable energy infrastructure, okay? Say you want to do that.
Right.
Now, if you've got connections in the American financial market based on the fact that your president and the US vice president are meeting, that opens the channels for you to start having much more conversations, because they love to tout things like that. So do you see what I mean? That now the doors are open to negotiating with business in America. The doors are open to negotiating with business in China. You can start to work a bit more globally as an individual. So you can find more opportunities when these things are being done. And because it's forced America to come here, because they used to say, until we see certain social conditions met. We all know what that means, Vernon. It means certain beliefs of ours have to be scrapped so that certain groups of theirs can be accommodated for. Okay, those were the terms they used to give African countries. So African countries said, "Fine, we'll do business with China." They turned around and found China doing $250 billion of business with Africa, and Africa is holding the basin of most of the minerals required for electric cars. And they realize how much danger they're in because of their little wokeness parade, which they brought on themselves. Now they have to backtrack a little bit and start doing business with us before they start trying to influence us. Okay, so that's what they've started to learn, and they're now learning to be more economic about their conversations, talking about food security, inclusive growth. That's what they're trying to deal with now, as opposed to the old conversations of, we'd like to see certain behaviors embraced in your economy, in your society, before we give you any money. They've learned their lesson for that one. Now they've realized that there actually is an opposing force to them. They got comfortable being the only power in the 90s and the 2000s where they could say such things. Now they're facing competition. So the other thing I just wanted to quickly have a conversation about, Vernon, today is there has been a lot of conversation about Silicon Valley Bank and the potential bank failures of America. So I'm going to first start by telling you there is no current potential bank failure in America. There are some banks that are failing, okay? And they have got idiosyncratic issues attached to them. Silvergate, Signature, and Silicon Valley Bank all went and messed themselves up because they took very long positions on bonds and unfortunately have got depositors who pull money out very quickly. They've got what we call interest sensitive depositors. So during the time when the Federal Reserve was pumping out heavy amounts of cash, a lot of venture capital firms went and now started pushing money into new startups in the tech industry. And these new startups got huge capital injections from their investors. So they deposited their money at Silicon Valley Bank. Now, Silicon Valley Bank mainly operates with businesses that have got huge deposits. They don't have a lot of small businesses which have got a lot of individuals who have got small deposits of $250,000 or less. They've got huge deposits. So what Silicon Valley Bank did was they gave out some loans, but they invested in a lot of government bonds. Then the Federal Reserve started to raise interest rates. They had an average duration of 6 years on government bonds. Now, that shouldn't be a problem under normal circumstances. Most banks just hold their bonds to maturity, wait for them to mature, and then they can collect their cash without taking any losses. Unfortunately, because of Silicon Valley Bank's depositor profile of mainly small Silicon Valley companies, which are big depositors. They're institutional depositors with huge amounts of deposits. They were having cash problems. The tech industry was struggling, so they started pulling money out to meet obligations until on one specific day, Silicon Valley Bank customers tried to pull out $49 billion in deposits. Okay, they tried to pull out $49 billion in deposits. That is what now called the FDIC, the Federal Deposit Insurance Commission, to actually come in and make sure that they protect the depositors from a bank run. That is what they're trying to sort out. Because the main one, now, everyone then says, okay, now is the bond industry going to collapse? No, the fixed income industry has not collapsed. The majority of American banks take 60% of their deposits from small depositors and individuals who deposit less than $250,000. The majority of the book. Those are the people less likely to withdraw their money based on Fed interest rates. They are less likely to do that. They will withdraw their money mainly because of a recession, but not due to Fed interest rates. Now, Silicon Valley Bank is a situation like that. Silvergate was a crypto lender. Those guys were doomed when the crypto industry went under and FTX had a problem. They were doomed from that moment. So the worry in America is that regional banks who may not be federal deposit insured corporations may start to see people pulling out deposits and then putting them into the bigger banks. That is the biggest risk that is sitting on the U.S. books. Now, there is a little bit of a reaction happening on the broader market, but it is not a widespread contagion that will probably get to Zambia. Zambia has its own issues that it's dealing with. Okay, we have a debt that we have not fixed yet. That's a bigger issue right now than what's happening at Silicon Valley Bank. It's a nice news story that makes us sound intelligent, but it's also a cautionary tale to banks in Zambia owning too much in bonds for too long duration. This is what I keep saying. When times are uncertain, shorten the duration of the bonds. In case Silicon Valley Bank, by the way, is an example of why I often tell people be very careful of holding too many long-term bonds, even in your personal portfolio, because if you have liquidity needs, you might put yourself in a situation where your balance sheet takes a slash if you have to try and withdraw them. Because what's happened to Silicon Valley Bank is instead of holding the bonds to maturity, cashing them out, and then being able to keep the bank in strong position, they had to sell those bonds, realize the loss, and then that hurt their balance sheet, and then sent it into a stock market spin and a bank withdrawal. That's where the problems were coming from. Okay, so as an individual, if you are holding bonds, I always be very careful of the long duration in times of uncertainty. And Zambia, because we don't have multi-year development plans, I always say 5 years is really the max that you should be holding. If you want to invest in a long-term bond, I have given instructions to people before to say that becomes your source of investment capital. But holding a long-term bond portfolio until we get policy certainty and until we get a proper succession. You know what my biggest problem, Vernon, is with Zambia? Is that since the beginning of this country, no president has gotten the succession question right. No president has managed proper succession. Okay? President Chuba got lucky, but that was the guy he really wanted. He was hoping he'd be a puppet and continue. But the reality is no Zambian political party has successfully managed proper succession. If we can get succession in politics correct, then you can start to lengthen your bond durations. But we cannot get it. That's the biggest problem. Once a president's 2 terms are over, if they live to see the end of those 2 terms, because that's where the problems start to come, once that president's 2 terms are over, we're at risk of a total change of policy and direction. So that is why I'm always telling people, be careful of long-term bond duration, because you don't have the capacity to take on the risk that comes should we start to have a change in policy. Should the government say we're going to borrow till the end of the world, and then all of a sudden all your bonds start losing secondary value. Should you need to sell your bonds off and switch assets, you've harmed yourself. So your short-term bonds give you that kind of freedom. Right, now, finally, Vernon, as we wind up today, my final thoughts today on trying to create intergenerational wealth transfer. And I'm going to just quickly go, Vernon, in a very short space of time through 5 principles of intergenerational wealth transfer that you should be practicing. And there is more depth, but I will be talking about wealth succession in Zambia so that we can fix this problem. Now, intergenerational wealth transfer sits upon 5 important principles, and the 5 principles all start with E, because Munyumba always finds a way to make things start with the same letter, and it's very hard work to do that, so you must appreciate me for that. Now, no, it's just I use mnemonics a lot. It's my learning tactic. The first principle is what I call enlightenment, and enlightenment simply means, I always say, seek counsel. Don't, transferring wealth to your loved ones or whoever is going to succeed you in this pile of wealth that you've built, be it your bond portfolio, your stock portfolio. You say, when I pass, who is this going to? Who is now going to take over control of this? So if I set up a trust and that stuff. And I'll talk about trusts and structures tomorrow. But today I just want to talk about the 5 simple principles. And enlightenment means seek external counsel before you now set up who will be the administrator of your estate, who will be the one running the trust and therefore signing off on it. That's a very important question you need to make sure of. If you want to have good succession, selection of the right administrators. Now, if you leave it to the interstate administration, there's an interstate act, there is already a protocol set in. But if you have the Wills and Estate Act, it actually allows you to set up a trust and therefore be able to put an administrator of your own choosing that you are then able to assign. You can put your lawyer, you can put anybody to able to handle it according to the instructions that you leave. So make sure you have a trust with instructions, and we'll talk about that tomorrow. The enlightenment allows you. So be enlightened, because you don't want to try and make what is a very emotional decision, maybe on emotional reasons, when you should be making it on more long-term cause-driven reasons. The second thing you want to try and do is educate your beneficiaries. Okay, you must find their abilities in finance, and you need to educate your beneficiaries on money, how to handle money, how to grow money, what assets are in there. Take your beneficiaries through financial literacy. Take your beneficiaries through financial training. Do not hand over an estate to somebody who has not gone through any financial literacy training yourself. Otherwise, you'll have a problem. Your NAPSA is your estate. Your savings that you've been doing personally is your estate. Your houses, your land, all those things. Make sure your beneficiaries are financially literate. Educate them. The third thing is expose them. You need to expose them to your decision making. So whenever you're doing anything, like maybe going to meet your financial advisor, maybe you're going to meet somebody, take them with you. Okay, whoever is going to be your beneficiary, sometimes take them with you when you're doing life insurance negotiations or anything, trying to get a policy. Take them with you. That is a very important way of exposing them to the real life decisions that they need to make. So that is another thing you need to do with your beneficiaries. The fourth thing you need to do with your beneficiaries is you must give them experience in managing these things. So either give them a mini portfolio of their own to also manage, but also help them build a portfolio, encourage them to do that, or also now give them some opportunities to sign off on a few documents with you and co-run your assets with you. That is also a very good way to build the beneficiary to take care of your estate as well. And finally, you need to know where your end point lies. If you know that there has to come an end point to the managing it, and therefore you're going to have to hand it over, and there's a cause and a reason you want them to continue, you must know where is your end point in the journey of this reason that you are handing over your money. Maybe you want them to help finance church activity. Maybe you want them to help create a school trust because you really believed in education. There is only a point of maybe gathering the funds and everything. Maybe that's your end point. So you must know your cutoff point so you know when to really train your beneficiaries. Okay, so that you're not trying to do it when you're sick and you're about to die in the next year or two. But this has been a lifelong journey. What I must warn people is transitions take about 10 years of all these processes I'm talking about. You really have to make sure that for about 10 years, you're training and grooming somebody so that the transition is smooth. But if you try and do it at the last minute and you only do it on paper, it will be abrupt. So quickly, just a recap, get enlightenment. In other words, have an external party really get to the decision of your beneficiary with you, who. It may not always be the elders, could be somebody else. Educate your beneficiaries financially, expose them to your financial dealings, give them experience in managing your financial dealings, and understand your end point so that you know exactly where you end and where they start, so that you train them up to that position and you build them up. That is what we need to start doing in intergenerational wealth succession. We'll talk more about structure after we do the mid-market report next week, tomorrow.
All right, that is a wrap.
And I'll
Thank
leave
you
it
so
there.
much, Twale, for your time once.
Thank you very much, Vernon, and God bless everyone.